Imagine a world where you control your own money. No banks, no governments, just you and a digital wallet. This is the promise of Bitcoin and cryptocurrencies. They've exploded onto the financial scene, shaking things up and making us rethink how we use and think about money. Some say it's a bubble, others a revolution. But one thing's for sure, crypto is here to stay. Remember when the internet first started? Lots of folks didn't get it. Now we can't imagine life without it. Cryptocurrency could be the same, a game changer for how we do business globally. It's already used to buy things online, send money across borders, and even invest in new projects. But before we dive into the how and why, let's take a step back. What exactly are these digital currencies and where did they come from? Our story begins back in 2008, right in the thick of a global financial crisis. People were losing trust in banks and traditional financial systems. The world was ready for something new, something different. Enter Bitcoin. This wasn't just another online payment system. This was a whole new way of thinking about money. It was decentralized, meaning no single person or institution controlled it. It was based on cryptography, making it incredibly secure. And it promised transparency, with all transactions recorded on a public ledger called the blockchain. At first, it was just a bunch of tech-savvy folks and cryptography enthusiasts who were interested. They saw the potential of this new technology, but it was shrouded in mystery and a bit difficult to understand. It was like the early days of the internet, only a select few knew what they were looking at. Adding to the intrigue was the mysterious creator of Bitcoin, a person or group of people going by the name Satoshi Nakamoto. To this day, nobody knows who Satoshi really is. Were they a lone genius, a group of hackers, or something else entirely? The mystery only added to Bitcoin's allure. Satoshi released the Bitcoin white paper in October 2008, outlining the technical details of this revolutionary digital currency. It was a call to action, inviting anyone interested to join the experiment, and people did. Slowly but surely, a community began to form. These early adopters, often called cypherpunks, were drawn to Bitcoin's decentralized nature. They believed in a future where individuals had more control over their money, free from the interference of governments and financial institutions. They saw Bitcoin as a tool for financial freedom and empowerment. In 2010, a programmer named Laszlo Hanyecz made history by buying 2 pizzas with 10,000 bitcoins. At the time, those bitcoins were worth around $41. Today, that same amount of bitcoin would be worth hundreds of millions of dollars. Laszlo's pizza purchase became legendary, a symbol of Bitcoin's journey from obscurity to mainstream recognition. It showed how quickly the value of this digital currency could fluctuate. It also highlighted the potential for early adopters to reap enormous profits. As Bitcoin's price continued to rise, so did media attention. People were fascinated by this new digital gold rush. Stories of overnight millionaires and early investors buying Lamborghinis with their Bitcoin profits began to circulate. The world was watching, and the cryptocurrency revolution was just getting started.
Now let's get under the hood and try to understand the magic behind cryptocurrency. The heart of it all is something called blockchain technology. Don't worry, it's not as complicated as it sounds. Imagine a digital ledger like a giant book that keeps track of every single Bitcoin transaction ever made. This ledger is called the blockchain. But here's the twist. It's not stored in one place. It's copied and distributed across a massive network of computers all over the world. These computers, called nodes, constantly talk to each other, verifying and adding new transactions to the blockchain. Each block of transactions is linked to the previous one, creating a chronological chain, hence the name blockchain. This makes it incredibly secure because to tamper with one block, you'd have to tamper with every single block before it, which is virtually impossible. So how do new Bitcoins come into existence? This is where things get interesting. It's all thanks to a process called mining. Think of it like digital gold digging. Miners are basically powerful computers that solve complex mathematical problems. The first miner to solve the problem gets to add the next block of transactions to the blockchain and is rewarded with brand new bitcoins. It's a bit like a giant digital treasure hunt. The difficulty of the problems adjusts automatically, ensuring that new bitcoins are created at a steady and predictable rate. This process also helps to secure the network, as the more miners there are, the harder it is for anyone to gain control of the blockchain. Now, let's say you want to send some Bitcoin to a friend. What happens? Well, it's surprisingly simple. You create a transaction using your digital wallet, which is like your online Bitcoin account. This transaction, including your wallet address, your friend's wallet address, and the amount of Bitcoin you're sending, is broadcast to the network of nodes. The miners then verify the transaction, making sure you have enough Bitcoin in your wallet and haven't already spent it. Once verified, the transaction is added to a block and added to the blockchain. Your friend receives the Bitcoin, and the transaction is recorded for all to see on the public ledger. The whole process is usually much faster than traditional bank transfers, often taking just minutes. Plus, the fees are generally lower, especially for international transactions. This makes Bitcoin a very attractive option for people who need to send money quickly and cheaply across borders. Section 4. Wallets, your digital piggy bank. To store and manage your Bitcoin, you need a digital wallet. Think of it like your online Bitcoin bank account. There are different types of wallets, each with its own pros and cons. Software wallets are apps that you can install on your computer or smartphone. They're easy to use and generally free. Hardware wallets, on the other hand, are physical devices that store your Bitcoin offline. They offer the highest level of security but can be more expensive. No matter which type of wallet you choose, it's important to keep your private keys safe and secure. These keys are like your digital signature, allowing you to access and spend your Bitcoin. If you lose your private keys, you lose access to your Bitcoin forever. Section 5. Beyond Bitcoin, a world of cryptocurrencies. While Bitcoin was the first and is still the most well-known cryptocurrency, it's not the only one. In fact, there are thousands of different cryptocurrencies out there, each with its own unique features and purposes. Some, like Ethereum, are designed to run decentralized applications, kind of like apps on your smartphone, but powered by blockchain. Others, like Litecoin, aim to be faster and cheaper than Bitcoin for everyday transactions. The world of cryptocurrencies is constantly evolving, with new coins and tokens popping up all the time. It's an exciting and rapidly changing landscape full of innovation and experimentation. But it's important to do your research and understand the risks before investing in any cryptocurrency.
Section 1. Spending your digital cash. So, you've got some Bitcoin burning a hole in your digital wallet. What can you actually buy with it? Well, more than you might think. While it's not quite as widely accepted as traditional currency, Bitcoin and other cryptocurrencies are gaining traction as a payment method. Online retailers are leading the charge. Overstock.com, Microsoft, and Expedia are just a few examples of big names that accept Bitcoin. You can buy anything from furniture and electronics to plane tickets and hotel rooms, all with your digital cash. But it's not just online. A growing number of brick-and-mortar businesses are also embracing cryptocurrency. Cafes, restaurants, and even some luxury retailers are accepting Bitcoin payments. There are even Bitcoin ATMs popping up in cities around the world, making it easier than ever to convert your digital currency into cold, hard cash.
Beyond borders, remittances, and global payments. One of the most promising use cases for cryptocurrency is in the realm of international payments and remittances. Traditional methods for sending money across borders can be slow, expensive, and bogged down by paperwork. Cryptocurrency offers a much-needed alternative. Imagine sending money to family members overseas with just a few taps on your phone, bypassing hefty bank fees and long processing times. That's the power of cryptocurrency. Because it's decentralized and operates on a global network, transactions can happen quickly and cheaply regardless of location. This is particularly beneficial for migrant workers who send money back home to their families. Cryptocurrency can help them keep more of their hard-earned money, putting food on the table and supporting their loved ones back home. It's a game changer for financial inclusion, empowering people who may not have access to traditional banking systems.
Backing a good cause, cryptocurrency for charity. Cryptocurrency is also making waves in the world of philanthropy. Because transactions are transparent and traceable on the blockchain, it offers a new level of accountability for charitable donations. Donors can see exactly where their money is going and how it's being used, fostering trust and transparency. Several charities and non-profit organizations are now accepting cryptocurrency donations. The Pineapple Fund, for example, was established by an anonymous Bitcoin millionaire to distribute millions of dollars worth of Bitcoin to various charities around the world. Cryptocurrency can also be used to fund innovative projects and initiatives that might not otherwise receive traditional funding. It's a powerful tool for social good, enabling individuals to directly support causes they care about and make a real difference in the world.
Investing in the future crypto and the stock market. The rise of cryptocurrency has also caught the attention of Wall Street and the traditional financial world. While still considered a volatile and high-risk asset class, cryptocurrency is increasingly being seen as a legitimate investment opportunity. Major financial institutions are now offering cryptocurrency-related products and services, including Bitcoin futures contracts and exchange-traded funds, ETFs. This allows investors to gain exposure to the cryptocurrency market without directly owning any digital assets. However, it's important to remember that cryptocurrency is still a relatively new and unregulated market. Prices can fluctuate wildly, and there's always the risk of scams and fraud. As with any investment, it's crucial to do your research, understand the risks, and invest only what you can afford to lose. Section 5. Challenges and Opportunities. A look ahead. While the future of cryptocurrency is full of potential, it's not without its challenges. Volatility, regulatory uncertainty, and the potential for misuse are all factors that could impact its long-term adoption and success. Governments around the world are grappling with how to regulate this new asset class, with some taking a more open approach than others. The lack of clear regulations can create uncertainty for businesses and investors, hindering mainstream adoption. Despite the challenges, the cryptocurrency revolution shows no signs of slowing down. As technology continues to evolve and more people become aware of its potential, cryptocurrency is poised to play an increasingly important role in the future of finance and beyond. It's a disruptive force, challenging the status quo and forcing us to rethink how we think about money, value, and the global financial system.
Section 1. The roller coaster ride, crypto's price volatility. Let's face it, the cryptocurrency market can feel like a roller coaster ride. One minute it's soaring to new heights, the next it's plummeting back down to earth. This volatility is one of the biggest challenges facing cryptocurrencies. Remember the Bitcoin pizza? That's a prime example of how quickly things can change. While those early investors who held onto their Bitcoin have made a fortune, those who bought at the peak of a price surge might be feeling a bit queasy. This volatility stems from a number of factors, including market speculation, regulatory news, and even tweets from influential figures. It's a highly speculative market, driven by emotions as much as fundamentals. This makes it exciting for traders looking to make a quick buck, but can be nerve-wracking for long-term investors.
Section 2, Security Concerns, Protecting Your Digital Wealth. Just like with your real-world wallet, security is paramount in the world of cryptocurrency. Because it's digital and decentralized, it's crucial to take steps to protect your digital assets from theft and fraud. We've already talked about keeping your private keys safe. Remember, those keys are like the combination to your digital vault. Lose them and your cryptocurrency is gone forever. It's essential to store them securely, either offline in a hardware wallet or using a reputable software wallet with strong security features. But it's not just about protecting your keys. You also need to be aware of phishing scams, malware, and other online threats that could compromise your cryptocurrency holdings. Be wary of suspicious emails, websites, or social media messages promising easy riches or asking for your private keys. If it sounds too good to be true, it probably is.
Regulation roadblocks. Governments grapple with crypto. Governments around the world are still trying to figure out what to do with cryptocurrency. It's a new and constantly evolving technology, and regulators are struggling to keep up. This regulatory uncertainty is another challenge facing the widespread adoption of crypto. Some countries, like El Salvador, have embraced cryptocurrency, adopting Bitcoin as legal tender. Others, like China, have taken a much stricter approach, cracking down on cryptocurrency exchanges and mining operations. This patchwork of regulations creates confusion for businesses and investors alike. It also makes it difficult to establish clear guidelines for consumer protection, anti-money laundering measures, and tax compliance. Until there's more regulatory clarity, it's likely that cryptocurrency will remain a relatively niche market.
The dark side of decentralization, illicit activities, and crypto. While cryptocurrency offers many potential benefits, it's also been used for illicit activities. The anonymity and decentralized nature of crypto make it attractive to criminals engaged in money laundering, drug trafficking, and other illegal activities. Remember the Silk Road? That's just one example of how cryptocurrency can be used for nefarious purposes. Law enforcement agencies around the world are working to combat these activities, but it's a constant game of cat and mouse. This dark side of cryptocurrency has given it a bit of a bad reputation in some circles. It's important to remember, however, that cryptocurrency is just a tool. Like any tool, it can be used for good or evil. The vast majority of cryptocurrency transactions are legitimate, but it's crucial to be aware of the potential risks and take steps to mitigate them.
We've covered a lot of ground, from the mysterious origins of Bitcoin to the potential impact of cryptocurrencies on global finance and beyond. It's clear that digital currencies are here to stay, but their future remains unwritten. Will they revolutionize the way we think about money, or will they fade into obscurity? One thing's for sure. The world is changing at an unprecedented pace. Technology is rapidly evolving, and the way we interact with money is no exception. Cryptocurrency is just one example of this shift towards a more digital and decentralized future. Think about it. We're already using our phones to pay for things, send money to friends, and manage our investments. Cryptocurrency takes this a step further, offering a secure, transparent, and borderless way to transact value. It's money for the digital age, and it has the potential to empower individuals and businesses in ways we're only just beginning to imagine. The cryptocurrency world is still in its infancy. It's a bit like the Wild West out there, full of opportunity, risk, and a healthy dose of uncertainty. But that's also what makes it so exciting. We're witnessing the birth of a new financial frontier, one that's not controlled by governments or large institutions, but by the people who use it. It's a world where innovation is happening at lightning speed, and where the possibilities are limited only by our imagination. Whether you're a seasoned investor, a tech enthusiast, or just curious about the future of money, cryptocurrency is a topic worth exploring. It's a complex and rapidly evolving landscape, but it's one that has the potential to shape the world for generations to come. So buckle up, because the ride is just getting started.